Hey, Jack, welcome to Face. A pleasure to meet you. Want to thank you for taking the time out of your, especially on a big number like this. I don't know about your trading style, but I'm asking you to unmute right now. Welcome to Face, Jack.
Hey man, appreciate it. Thanks for having me here.
Yeah, it's
Fun show.
great to have you. You know, uh, did you want to share your screen during this interview and show some things? Because if not, I could do that and we could move around the markets. Up to you.
Either way is fine with me. I'm good
Okay,
either
well,
way.
let's see your setup. The share screen's at the bottom.
Yeah,
It's a green
gotcha.
button.
Mm-hmm.
And
Going
before
right
we
there.
get to data and markets and trading, it's always interesting for me and for the viewers to know about, what people were doing before they got into the industry and, what their first gig in the industry was and just the journey, Jack. You want to tell us a little bit about yours?
Sure. So I am a pharmacist by trade. So
Okay.
that's what I do outside the house. And I started trading markets about 10 years ago. And like most people, I went ahead and tried everything under the sun first.
Yeah.
Fundamental data and all kinds of different things, and eventually got into technical analysis. Yeah, it's just kind of what spoke to me, with the visualization of price. That was really what really spoke to me. So that's what I've been doing since. And again, I've been doing in the beginning I did things the wrong way and made all the mistakes that probably every new trader makes, and slowly over time tightened up processes and everything else. And now, I'm where I'm at today, and I know I'll be a better trader, 2 years from now. And it's just always a journey and a process of getting better in the markets,
Yeah, it is. That's the challenge and makes it interesting. How many years would you say it took you before you made some breakthroughs to where were uh, consistent, semi-consistent, at least, had a level of conviction that this is a way there is a way you can win.
Yeah, so it probably took me about 6 years or so. It
Okay.
wasn't. I know some people say 3 years, 4 years. For me, it was
Yeah.
about 6 years. But luckily, I was trading real small at the time. So every time that you got some feedback from the market, that was some negative feedback from the market on your trading account, it really didn't hurt me that much. So I only kind of started building up my account, after that negative feedback was less.
Okay. So okay, Jack, did you have any mentors or books that were major influences that helped you out along your road?
So I guess, I like How to Make Money in Stocks, William O'Neill. I think that was
Yeah.
a huge book for me.
Yeah. Relative strength issues, kind of looking for leadership and laggardship, right?
Yeah, love relative strength, and I do a
Okay.
top down and a bottoms up, through scans and stuff like that. I like Minervini's books. I think and Trade Like a Champion was a great book for me.
Okay.
And Weinstein, I liked Weinstein a lot too.
Oh, yes.
Yeah,
Yeah.
I think those understanding market structure, I think he explained it excellent in his book. So yeah, if I had three books to that really changed the way I trade, it was those three by far.
Okay. All right. So let's get to what's been happening. 2022, rough year or good year for you?
Yeah, so it's funny. On my Twitter feed back November of last year, I wrote a post that said, I cautioned everybody. I said, listen, I just told my wife how much money we're making in the markets, right? So everyone just be careful, because once you do that, it's all over, right? And that literally was probably within a week or two of the top of the market. So it's kind of funny. But
Oh, okay. Yeah.
but 2022 is it
Challenging.
was challenging in the first half, and then I traded it much better in the second half.
Okay. All
Yeah,
right.
and I'm sorry, and
Why
it
why
was
do you
kind of
think
funny.
that is? Why do you think it is that
Um,
you made the adjustment to the new regime, started realizing that, what had been going on for 10 years, that game was over, like fangs and,
yeah,
just buying a spider and you could, be a genius.
Yeah, pretty much. It took just me a little bit of time to adjust to the, like I said, the new regime. And it wasn't so much where I was trying to cling to the old leaders, but I don't think I wanted to just to realize that a major market top was in, and that's what we had. We had a major market top, and
Right.
we'll see if in 2023 if if we're at the bottom or not. We don't know yet, but
Okay.
my guess would be that there may be another leg down. That's my guess.
Okay. And I noticed you're, went to your stream, Jack, and I
Mhm.
noticed you're a stock picker as well. You don't just trade indices, you trade individual stocks as well.
Correct.
Okay. All right.
Yeah.
Any sectors, in December, people start to think about their future and
Hmm.
what they did, they're being reflective and campaign trades and your outlook. I know it's a day at a time, but have the markets shown their hands with things like the gold ratio to banks and the S&Ps beginning to shift towards hard assets and away from paper?
Yeah, so that was I was actually looking at bonds the other day, and I think that kind of goes into your question. And
Yeah,
even though, and here's the 10-year yield, think you guys could see that,
right.
we had, the big run up as the Fed is, raising rates and everything else, and even beyond
Yeah,
this.
yeah,
And they're still raising rates,
yeah,
yet we're seeing interest rates fall, right? The 10-year yield fall. And so that flight to safety, right? People buying bonds,
yeah.
um,
They're worried about
that
economic weakness now, not
yes,
inflation. Okay.
right. So I think the narrative has changed, right? So
Yeah,
in November, the narrative changed, and so yeah. So whether there's a recession coming, whether we're in a recession already, who cares, right?
yeah.
But the narrative changed, and I think that is something that we need to all take notice of.
Okay.
Um,
I'd like to go back to your S&P chart and you had the line that the whole universe
yes.
is paying attention to.
Mhm.
Um, doesn't it seem too pat? And I think we could get, we're getting whacked today. I'm not looking at my prices right now, but doesn't it look like there's destiny for this after a pullback to break out above it to really create some bullishness? Um, Even if the bears are right and we only trade up around 43, 4,400 and roll over again.
Yeah, I mean, so I think for me, the bullish scenario would be this pullback, and then you
Yeah.
get some strength. And at that point, your 200-day moving average would be flattening. So if pricing get above a flattening 200-day moving average, I think that's probably the best case for the bullish scenario, right?
Okay.
Because a flattening to rising 200-day would change my outlook on the market, right? Price under a declining 200-day, and I'm going to have a bearish tilt always in the market.
Okay.
Price gets above a flattening to rising 200-day, and now I'm going to switch my tilt to more of a bullish tilt.
I know a lot of people are hoping we get a rally up towards 4,200 to get short.
Yeah.
And you know what? I understand the case for another low. I see two drives there, but
Hmm.
it's almost like it's becoming the consensus view
Yeah.
that we need one more flush. We never had capitulation.
Yeah.
Uh, Maybe the market's going to be up into the Fed's face into the spring.
Yeah.
Could
Well,
that
listen.
happen?
Yeah, well, listen, that was me on the COVID lows. I was the guy who was saying, we're not going straight up. We got to have a retest of the
Okay.
bottom, make a double bottom, whatever.
Yeah.
And so
Yeah.
I was late to jump into that rally because I'm saying, okay, this is a place where we're going to get it's going to start to pull back
Right.
here. And it just never did.
We get married to a narrative, and then when it doesn't happen, we become like a deer in headlights, and we have to wait for the market to reset again. Right?
Yeah, that's
Yeah.
exactly right.
I've done
That's
that a million times, Jack.
Yeah,
All
it's
right.
the way it works. But I'll be honest with you, it's different this time. And then the reason why it's different is that back then the Fed was cutting interest rates and pouring
Right.
money into the economy. We don't
Right.
have that this time. So
We don't.
so it's not the same scenario in any, not even close, in my opinion.
Okay. So, I would say that some of the star sectors over the last quarter or so would be miners.
Hmm.
What are your favorite sectors to either short? The banks really haven't participated lately, and if yields are going to continue to drop, even though they're popping here for a while, how do you feel about the financials in here?
Yeah. So XLF. I'm going to go to let's go to a weekly chart on XLF. Okay. So this is the area that I said had to hold, right? So we're
Yeah,
going back to the 2007 highs,
yeah,
2000 right over here. It retested it, came down, support held, right? Right
yeah.
there. I mean, huge spot, right? This
That would
$30.
be analogous to what, Jack? About 1,500 S&Ps, which we never, maybe this is a foreshadowing that if the XLF could do it, one day the S&Ps will come back to that same type of level, which
Yeah.
was 1,500 in what, 2000 and 2008. I
Right.
think we had the same kind of setup there.
Let's take a look here. 2000, 2008. Let's see what it looked here. That was roughly, yeah,
Yeah,
1500.
yeah,
Exactly right.
yeah.
Yep.
So if you had the same time frame chart, it would look almost identical, except we haven't gotten down there.
Yeah, exactly. So
Yeah,
that'd
yeah.
be crazy.
Okay.
All
All
right.
right.
So yeah, so this is the XLF. So this is the area that had a hold. It did hold, which I think is, constructive, obviously. And now it's back to, this general area. And you see, volatility has been, as it's coming up into this resistance, it's been kind of expanding, right? And so, it couldn't get above it, false breakout right over here, fell below. We'll see if it continues lower. Um, not a constructive looking chart right now for me. This is definitely something that, you still have a declining 200-day, even though price is above it. I think this chart goes lower and looks like it's going to already this morning.
Okay. All right. Why don't you, instead of me guessing,
Yeah,
tell us what, you're positioned in or what you're looking to position yourself in.
sure.
Just your view. So I know you think the market's going to go lower next year. Are you positioning yourself for that, and how would you do it?
So my time frame is usually, weeks. It could be a couple of months, but it's not super long, in the future. So I'm looking right now. I'm just looking to finish off this year, and then I'll start looking into next year. So over the next few weeks.
Why don't you take
But
the rest of the year off, like
right,
like the hedge funds? I always, yeah, look, I've been doing it a long time, and I always ask myself, why am I, you know, trying to make your year in December, which a
yeah,
lot of people are still trying to do, is like trying to make your week on a Friday.
yeah.
The big money have closed their books. It's okay to do nothing, isn't it, during the month of December?
100%. And I'm probably right now about only 25% in the market.
Okay.
So that's
Okay.
where I'm.
Yeah,
I
I'm looking forward to next year already. I'm
Yeah,
starting to think
absolutely.
about next year. So, okay, iShares Biotech. Okay.
Biotech. Right, sure.
Yeah,
So beautiful looking base. That's the way I look at this.
real nice.
Yeah, it's trying to break out. It kind of failed right here. So now it's kind of on watch, right? It's a little suspect at this point. But different than most of the other charts is you already have a 200-day that's already flat to almost rising at this point.
That's a big
So
part of your analysis, the flattening out of the 200.
yeah, I mean, especially for that bigger picture look, there's nothing better than the 200-day, in my opinion. And
Okay.
not because I think so, because that's what all the other market participants want to use, right? So we don't
Right.
really care what the average is, but if everyone's using it, then it has some importance at that point.
Okay.
Um,
Saucer
it-
bottom.
yeah, beautiful saucer bottom. Again, try to break out, kind of failed, but kind of came back through. The orange line is my 23-day EMA. And I like that one just for medium term trend, and it's it's up and to the right, and so I am invested in biotechs. I have been from back in here or so when I broke out of this area, and so I added to my position a little bit here, and we'll see if
Do you
it breaks down.
consider do you
Mhm.
consider biotech a bit of a defensive group?
You know, Biotech's no, healthcare yes. So,
Okay,
biotech is for me, that's a very risky area, and so I won't buy an
okay,
individual biotech. Very rarely will I buy an individual biotech,
right,
but that's why I trade the ETF.
okay,
It's too much risk there. But yeah, so healthcare I do consider defensive. Biotechs, it's a technology company, really, in a lot of ways. So,
yeah. Really
um,
nice looking chart there, Jack. You know, the star last year was oil,
mhm,
not the commodity, because the commodity topped after the invasion,
yeah,
but the shares were printing money, paying dividends,
sure,
great yield play. I know they've come off. We've broken down a little bit. I thought maybe around 80, it might be worth a shot down
yeah,
there if we got there in the
yeah. Here's
oils.
another one that was basically from 2008, right? It
Yeah,
kind of false breakout here, came back up to the scene of the crime, and still can't bust through this area, right? An
yeah,
XLE, so another 2008 analogy.
that's
Um,
interesting. Yeah.
yeah.
So I mean, cruise at 70 now. They look like two different charts,
Hmm.
even though
Yeah.
they're related. To me, I've never seen anything like that. And you have to believe. I was always taught that the stocks lead the commodity, so maybe it's WTI, that the commodity itself, that's undervalued,
Yeah. I mean, could be, but this is like for me, like
bearish.
bearish, right? There's no reason to be, and it's just avoid, right? And I mean, you could short it if you want to, I guess, but
Yeah.
for me, it would just be an avoid. I'd rather be on the long side of the market than to short. That's
Okay.
just my personality. It's what I like to do.
How about things that if you drop them on your foot, it hurts, like copper, gold, silver,
Yeah,
any of those miners, ETFs like, I don't know, GDX,
yeah,
COPX appeal to
hmm
you?
yeah. GDX looks good, right? I mean, that looks real good right here. It's kind of like at its inflection point
Yeah,
right here.
I would
So
certainly buy a pullback to 26 if it
yes,
happened.
exactly.
Yeah,
Right. So for me, right, you got to pull back somewhere in
it,
here, and then you can
yeah,
buy it here, and then it's very easy to manage risk
yeah.
right there.
It's on my shopping list.
Yeah. Yeah. Like,
So,
like
yeah,
for me, a breakout here though would be a fool's errand because it's most likely going to have some sort of pullback before it goes higher.
launches. Okay.
Yeah.
And does the dollar, that's our bailiwick, the dollar FX, does the movements in the dollar, you pay attention to them? Is it part of your macro analysis, what the dollar's doing?
It is. I'll be honest. I thought the dollar was going to come back up to again, going back to a weekly chart. You know, going all the way back to here's 2002, right?
Yeah,
2001, 2002, and it
yeah,
was at 120, 121
yeah.
ish,
There
right
were a
around
lot of
there.
people calling for 120. They still are. If
Listen, maybe,
104 holds, isn't this really
yeah,
the line in the sand for the bull case where we're at in the dollar right now, with your
100%.
eyeball?
Yeah, that's where I have my little green line right there. That was
Yeah.
the 216 highs, that was the 2020 highs, and now will that be support? Maybe. We'll see. We'll see. But this is the spot, right? It's like right there.
Okay. So Jack,
Yeah.
do you have a business model, or you're just on Twitter sharing ideas to help people and you just trade your own account?
Yeah, so I trade my own account. I do every week I drop YouTube videos. I go over my on Saturday I go over my whole, I call it state of the market, where I see like, is it healthy market? Is it a sick market? Because I think that's always where, we should start our trading, right? What kind
Right.
of market are we in? And then on Sunday I do a stocks to watch video on YouTube. Again, they're both free. And I basically go over the best ETFs and the best ideas I can find going into the week, and the setups that I'm looking at.
Do
You
you
can
do
also,
it because it helps you?
oh,
I know that,
100%.
when you're doing these things, it's like NLP, the more you hear yourself say the right things, the more you're going to react that way. Kind of like, sets a paradigm for you. So
Yeah.
you do this, it helps people, but it also helps yourself, even though it's free.
Yeah, 100%. It helps me. I'm doing the work anyway,
Yeah.
and I'm doing the work anyway, and so I share freely, but it forces me to be regimented and structured in what I'm doing in the market. So it's actually been very, very helpful personally, in me, for me. You know,
Okay.
I post on Twitter as well at Alpha Charts 365 is my
Right.
handle. You know, you're welcome to follow me if you want to. And I do offer a super follow group through there. It's super cheap. It's you know, because they only let you charge like $10 or something for it. And then I do
What kind of
extra.
group is it? What
It's
kind
called
of
a
group?
super follow. It's through Twitter.
Oh.
And
Oh, okay.
yeah, and basically you know, people sign up. I think it's $10 a month. And basically I
Okay.
put out extra notes throughout the week, a couple extra videos and watch lists and things of that nature, a little bit more in depth of, and basically it's just me talking out loud on what I'm thinking through on the market, more in depth, basically.
All
Um,
right, Jack. Jack.
yes,
Well, that's I think people should check it out. And I'm showing your Twitter page right here. So here's Jack. And you're now my trading warrior, brother, because we've talked to each other and you survived the interview.
absolutely, Dale. I appreciate that, man. Thanks for having me on. It's been a lot
It's
of fun.
great having you on. Why don't you give us your best idea? Be Nostra Jack and your best idea for 2023.
Oof, we're 2023.
Yeah,
Mm.
I know it's way out there, a whole
I
3
know, right?
weeks, man.
I mean, right
Come
now
on.
I'm only in two. I'm only in two things right now, which is IBB, and I'm short via TZA, small caps. So I don't know if I
Okay.
have a good idea at this point, but I would
All
say
right.
IBB. IBB is my favorite right now by far.
Okay. All
Yeah.
right. So we'll go with that, Jack, and I
Yeah.
really appreciate you taking the time. Um, Happy holidays, Merry Christmas, and let's do it again down the
You
road.
got, you got it, Dale. Happy holidays again. Take care of yourself. We'll talk to you soon.
All right, everyone. Jack Tacher. Do I have it right? Is it Tacher?
Tacher, but it's good enough.
Tacher.
Yeah.
Jack Tacher. And you can follow Jack at Alpha Charts 365, which means he's at it every day.
Perfect.
So thank you, Jack.
Take care,
Rooting
Dale.
for you now, buddy.
All right, man.
All right. That's a wrap, everyone. You could join the team in 20 minutes for the Morning Edge. Hope we added value to what you're trying to accomplish as traders. It's not easy, but you have to be able to get up off the carpet if you've been knocked down. That's what champions do. So don't just count your pips, count your blessings. You're welcome, everybody. Have a great weekend. It isn't easy being cheesy. For me, it is, Richard. All right. Take it easy. See you, Jack.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.